this lesson, we're going to look at net pay and deductions. So net pay, you'll remember from our previous lesson, is the amount that you actually receive each pay period, or the amount you take home, and is typically called your take-home pay. And that is because this is your gross pay minus deductions. That's equal to your net pay. Now, deductions, there are many types of payroll deductions. Some are mandatory and some are not. Some of the examples of deductions include the Canadian Pension Plan, employment insurance, income tax, union dues, health and dental plans, and registered retirement savings plans. There are three deductions that are mandatory in Canada. Those are the Canadian Pension Plan, employment insurance, and income tax. So these three here, these are mandatory deductions. That means you have to pay these. Whether you're self-employed or whether your employer deducts them for you, you have to pay those three things. Union dues, health and dental plans, and registered retirement savings plan, those are optional, and those are based on an agreement made by you and your employer. Let's take a look at the three mandatory ones. So, for example, the Canada Pension Plan. So this again is a mandatory deduction, and it's paid to the federal government by your employer or by yourself if you're self-employed. The government collects 5.1% of your gross annual income between $3,500 and $57,400. The $3,500, this amount here, this is called your personal deduction. So that is deducted from your gross salary. And this here, this amount, this is the cap or the maximum that it's based on. So, for example, let's suppose that Jun's gross salary was $67,500 last year. Let's look at what Jun's deductions, CPP deductions, are going to be. So we know that there's a personal exemption of $3,500 and a maximum of $57,400. Since Jun's salary was greater than $57,400, we're going to just take the maximum amount. We're subtracting from that this personal deduction of $3,500, and that's going to give us a total of $53,900. So that is what the CPP will be based on. So now we take this amount, $53,900, and we multiply that by 5.1%. And that gives us $2,748.90. And that's the maximum CPP that can be deducted from anyone's salary. Okay, let's take a look now at employment insurance. Employment insurance is another mandatory deduction, and it's paid to the federal government by your employer or by yourself if you are self-employed. The government collects 1.62% of your gross annual income up to a maximum of $860.22. And that maximum is based on a maximum income of $53,100. So let's take a look at an example of this. Let's suppose that Farah's gross annual salary gross annual income was $37,250 last year. So let's take a look now at her EI, or employment insurance deductions. Now we know that this is less than the maximum income. So let's take her income, $37,250, and multiply that by 1.62%. And if we do that, we get $603.45. And that would be the employment insurance that she would have to pay. Now, the last mandatory deduction is income tax. And this deduction is paid to both the provincial and federal governments by your employer, or by yourself if you're self-employed. The percentage paid in income tax is graduated based on your gross income. And we're going to look at those details in another lesson. Other deductions such as union dues, health care, dental plans, RRSPs, these are decided between you and your employer. And those rates vary considerably between employers.